This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Investors globally are having a rethink about the valuation rises that have gotten embedded since the pandemic. Warren Buffett is now cashed up. But before that, although it'll be a relatively quiet week for international economic releases, it is a big week at home. The important second quarter 2024 labour market report gets released on Wednesday, and there'll be more real estate market data early in this week. Plus, there's a full dairy auction on Wednesday morning. And there'll be living cost data released in Australia. Before that, we'll get the RBA's rate review decision late tomorrow. And inflation expectations survey results will be released this week across the ditch. And China will update its CPI and PPI, plus there will be a slew of services PMIs out everywhere too. Wall Street will wrap up its second quarter earnings season reports with some big later reports. By the way, Warren Buffett's Berkshire Hathaway reported its second quarter 2024 position late last week, and it has about $270 billion US, that's 450 billion New Zealand dollars, in cash on hand. That is actually more than the $409 billion New Zealand GDP over the past year. But basically, it's the Northern Hemisphere holiday season, so financial market activity will be relatively light for the rest of the month. This tends to accentuate any changes more than they would otherwise be. In China, their central bank said it will be pushing commercial banks to do more for the real economy. It wants to shift the financial sector's focus to, quote, benefiting people's livelihoods and boosting consumption, unquote, over the coming months. This change in emphasis follows pressure from the CCP third plenum meeting chaired by President Xi earlier in the week. The practical impact? Perhaps more debt issued for projects that have immediate effects but little long-term gains. And there are calls for monetary authorities there to allow higher inflation as some sort of spur to growth. Meanwhile, commodity prices keep on sinking as the overall stall extends. None of this is coming at a good time for China as they take their summer break. That tends to be when the leaders relax at their seaside compound. If they don't return with better plans and actions, there may be some grumpy countrymen. One initiative underway is to boost its urban living. In 2012, a bit over half of China's population lived in cities. In 2023, that had risen to two-thirds. Their new goal is to get 70% by 2029, thereby generating a surge in new economic activity. But there will be issues from this drive, not the least of which is food security. Meanwhile, flooding pressures are not easing there, and that too has implications for food security and agricultural output, especially for grains. And Singapore's widely watched local PMI was modestly positive in July, but far less positive than the internationally benchmarked version. The US economy added only 114,000 jobs in July and well below the downwardly revised 179,000 in June and forecasts of 175,000. It also the lowest level in 3 months, below the average monthly gain of 215,000 over the prior 12 months, signalling that their labour market is in fact cooling off. But most of the weakness was in the tech sector, with almost all other sectors holding their own. Pressure on wages is easing too, with weekly earnings up only 3.3%, again driven by their tech sector. Their jobless rate rose marginally to 4.3%, up from 4.1% in June. There are now 162 million people employed, a record high, in a 169.7 million labour force. This weakish American report actually had little impact on global markets because they were mostly sharply lower before this release, and there was no added change after that. You can claim it was priced in, and perhaps it was, but there is a broader re-ranking going on with a settling back in risk appetites. We shouldn't be surprised. Markets never go up forever. The US second quarter earnings season reporting has been strong, but it is less than the stellar outlooks that are influencing investors. Meanwhile, US factory orders, which were expected to show a dip in June, did just that, but the dip was larger at minus 3.3% than the minus 2.9% correction anticipated. The June fall comes after 4 consecutive rises, however. But American new vehicle sales rose more than expected in July to an annual rate of 15.8 million, a good bounce back from the 15.2 million vehicle sales rate in June. And we should also note that the UN-based International Seabed Authority has just elected a Brazilian scientist to lead it, its first scientist secretary general. This is expected to sharply slow seabed mining activity everywhere. The US Treasury 10-year yield is now at 3.79% and unchanged from Saturday. And the price of gold will start today up $9 from Saturday at $2,443 an ounce. And oil prices are holding lower at just over $73.50 a barrel in the US, while the international Brent price is just under $77.50 a barrel. A week ago, these prices were $76.50 and $80 respectively. And the Kiwi dollar starts today down 20 basis points from Saturday at 59.4 US cents. Against the Aussie, we're holding at 91.5 Australian cents. Against the euro, we're up 40 basis points at 55 euro cents. That all means our trade-weighted index starts today at 68.6 and up 20 basis points. A rising yen had influence on this too. And the Bitcoin price starts today at $58,163 and down an extreme 7.8% from where we left it on Saturday. That's a $9,330 drop in a week, or an eye-watering 13.8% down. Volatility over the past 24 hours, however, has been moderate at plus or minus 2.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.